Okay, assalamu alaikum everyone, it's my sister Sophie here. So I'm just going to be doing a revision video on the balance sheet because I think it's necessary and I think that you guys will really benefit from me doing this video. So the balance sheet that I'm going to be doing is from your revision booklet. So the revision booklet I gave you at the end of term 2. And then you go to the very last page. I think you will remember that I started it in extra classes or in class for the boys. It is Jimo Limited, right? It's the very last page of the revision booklet. It should say Accounting Paper 1, DBE November 2021. So it actually comes from a past paper, right? And why I think this is a good balance sheet is because it has all the little tricks as to how they might make the balance sheet tricky, right? So that's why I thought this is a really, really good balance sheet. If you just give me a moment, I hope that my screen is sharing. Let me just double check that quickly. Yes, this sharing is on. So I'm just going to open my answer booklet. There we go. Right now, before I even look at the question, before I'm going to enter any balances or anything, I need to know the format of my balance sheet, right? So the first thing I'm going to do is I'm going to go fill in my format. So I'm going to start here with current assets. I think, okay, here on top we have our non-current, we have our fixed assets and our financial assets, right? The financial asset, I think it's better to write fixed deposit, right? But as you can see, it's grayed out, so they don't want us to fill that in, right? So then we move on to our current assets. We have inventory, trade, and other receivables. Receivables go under assets because it's something that we have to receive. Remember, an asset is something that you make money off in the future. And if we're receiving, it's like we're making money off that. So it goes under the assets, trade and other receivables. And then last one is cash and cash equivalents, right? That's anything that's like cash needs to go there. Then we move down and we have our shareholders' equity. We have retained income, but something's missing on top. And that is your ordinary share capital. Please go through your format. Your non-current liabilities, which one is missing is your loan. I'm going to go further down under current liabilities and I'm going to check what is missing. Right. The most obvious one is trade and other payables. That is the opposite of on top. Trade and other receivable goes on top and payables goes at the bottom. Right. Then I need to remember my adjustments that was new to this year. So nicely they put bank overdraft in for us. I know what was new to this year was my SARS income. And then my shareholder for dividends. There we go. And the last one is our current portion of our, which we learned last year already. So our current portion of our loan, we can call it our short-term portion of our loan, and that is just the part of the loan that we're going to pay in the next couple of months, in the next 12 months, right? Now I'm going to turn the page to the information, and if you just, on the last couple of pages, just turn the page where it starts with information A. The first thing they give us is a list of balances. Now, the first thing I want you guys to do is actually go and put in those balances. Right, so we're going to start at the top, and the first balance they give us is the retained income, which I think is in for you here. The next one they give us is the mortgage loan. They give you the one at the start of the year, and then they give you the one at the end of the year. So let's say we're going to put the one at the end of the year in. 3755. We have to put the one at the end of the year because the one at the end, we are drawing up a balance sheet at the end of the year. Our trading stock we need to know goes into inventory. And you guys really need to know what goes under which heading. The other thing that goes under inventory is consumable stores on hand. So that is 4198,500. Right, under that is SARS income tax. It's a provisional payment. So I'm going to put it in there, but I think I'm going to write provisional payment just so that I know. I don't forget that that's my provisional payment, because they're not telling me that that is my SARS income tax. They're just telling me that's the provisional payment. The net trade debtors, which is your debtors control, and then you subtracted your provision for bad debts adjustment already. That is what net trade debtors is, and they give that to me, and I need to know that that goes under receivable. So 368810. I hope you guys are not lost. We're just on our list of balances. We have a bank overdraft and petty cash and cash float, which are question marks. When I see the question marks, I must know that that is going to be a missing or balancing figure. Then I'm going to go on, and creditors control goes under trade and other payables. So I'm just going to add that in there. 1253, sorry. 000. There we go. Putting that in there. And then I'm going to go to accrued income or income receivable. I mean, they put the income receivable, so it's nice because now you know it doesn't go under payables and it must go under receivables. So I'm going to go all the way to the top to receivables, and I'm going to add my accrued income of 8,000. And then my last one is my shareholder for dividend. And that you're just going to put in shareholder for dividend. 1170. I think if you guys remember correctly, your shareholder for dividend is what? And I'm just going to give you a few moments to think, like, where would I find it if they didn't give it to me? How would I know that that is the shareholder for dividend? Just a few seconds to think. It is your final dividend. Remember, with the final dividend, they always say that it was declared, and it's, maybe sometimes they even state that you're going to pay it early next year. But they never actually say that they paid it. They always say a final dividend was declared. It means it wasn't paid, so it's still a payables. It's still a liability. Liability is something that you owe. Okay. Right. So now I'm just going to move on to the adjustments, right? And it's very important that you guys have this in front of you, because I'm not going to go back to the question paper, because otherwise that means I'm going to have to move between tabs and between windows, and yeah, it's just not going to be effective. So it's really, really important that you have the information in front of you. Right. Now, the first information they give us is actually about your trading stock, right? They say at information B, the accountant omitted the closing stock figure of formal suits in the trading stock balance. So that means the closing stock was actually left out of your closing balance. So that means you must add it in, right? But they don't give you the closing stock. They say that they use FIFO to work out the closing stock. Now, I told you, and I hope that you guys have studied inventory already, that when we are working with FIFO, it stands for first in, first out. So it means that we're going to sell our older stock first, and what's going to be left is our newer stock. Right? So when we're working out the cost of sale for FIFO, we're going to sell the old stock first, but now we are actually working out the closing balance because we are missing the closing balance. And if I look at it on the 30th of June, the closing balance of stock was equal to 240 units. Does that make sense? 240 units. Now, how am I going to actually find my closing balance is, I'm going to say, you know what, because it's the closing balance, I know I must take from the newer stock. So the first thing I'm going to do is take note of my returns. Right? I'm going to take note of my returns, and my return says the 25th of May, I returned 24 units at the cost price of 2850, or the unit price of 2850. So I know that that returns was from the 24th of May. So I'm going to go from the 18th of May, where it says 230 units. So I'm going to subtract 24 units from that, because that is what they returned. So how much am I left with? If I take 230 minus 24, I'm left with 206. So I can say 206 units from the 18th of May batch. The cost price of that unit was 2850. And that's going to equal, let me just do that quickly, times 206. And that's going to equal 5,100. Does that make sense? So what I'm saying is I'm taking from my newest stock, which I bought on the 18th of May, and I only have 206 units, and I'm going to times it by 2850, and I'm going to get 587,100. But just take note that I actually have 240 units, and so far I've only made up 206. So from my next batch, which is on the 10th of May, I need 240 minus 206. So I need 34 units from my next batch. So I'm going to take 34 units and I'm going to times it by the 10th of May's cost price, which is 2,600. And that is equal to 88,000. Okay. Add that together. 88,400, and I add 587,100, and it equals 587,100, and it equals 667,500. So let's just take a step back, and what are we actually doing? They told me that my closing stock was left out, but I need to determine the value or find the value of my closing stock. So I have 240 units. And I need to make it up from all my batches, right? I need to go batch by batch and take from the newer stock first. So I have 206 units from the very last because I had a return of 24 units. And then I had to take 34, and together that should give me my closing stock of 240. So remember, they said it was left out of my trading stock. So that means I'm going to go to my trading stock and I'm going to add my closing stock that I just worked out, which was 675,500. I hope that everyone's okay with that, but luckily because it's a recording, you guys can just rewind and fast forward, rewind and fast forward. Okay, right. Now I'm going to go on to information C, which is on the next page. Information C says that, okay, I'm just so paranoid about recording. I just thought maybe I didn't press record. Sorry about that. Okay, so I'm on information C, and the information C tells us what our net profit before tax is. And then they give us, we don't need our net profit before tax, but we do need the adjustments that follows that. It says that audit fees includes 123,600, which was paid in advance for the next financial year. Okay, now usually when we had our income statement, we would take off because it's called a what? I hope you guys said prepaid expense. So we paid our audit fees in advance. And what I do know is that when I pay something in advance, it must go under trade and other receivables, because actually that expense that I paid owes me for the current financial year. So anybody that owes me needs to go under trade and other receivables. So that is 123,600. I'm done with that one. I'll take it off. Okay. Now I'm going to go on to I-on. It says that the repayments on the loan are fixed at 35,000 Rand per month, including capitalized interest. Now, why are they telling me that? They are probably telling me about that. Oh, they tell me why. The last sentence, they said just provide for the interest on the loan. Okay, now I'm going to go explain how a loan works, right? Loan payments. Guys will remember me telling you that loan payments are made up of two parts. It's made up of interest payments and capital payments. In capital payments, let's highlight that. The only part that decreases the loan amount. Every time I'm paying interest, and maybe that's why we don't indulge in interest, it doesn't actually reduce my loan amount. So if I want to find that interest, because they're only telling me to provide for the interest, and they give me the balance at the beginning and the balance at the end. So if I want to subtract those two, it's 417 million minus 4028. It is equal to 14700. So what did I do? I took the opening balance. Sorry, I took the opening balance. Why am I spelling so terribly? Minus the closing balance. Gave me an amount of 147. So remember, I told you that only the capital payments is going to reduce the loan. So that means that that 147 is my capital repayment. So I am looking for the interest part, and I have my loan repayment, which is 35,000 times 12 months, and that is equal to, it's equal to 420. Everyone okay with that? My interest payment is what I'm looking for, and I have my capital payment. My capital payment is 147. Okay. What is the obvious thing to do, guys? If I have my 420 and I have my 147 and I'm looking for the interest, I just need to subtract that. 147, and I get my interest of 273. Okay, so let's just take back. Let's go back one more step. Right, I work out that my loan repayment is equal to 420. My loan difference, oops, I hope you guys can see that, is 147. So I just subtract the two. Oops, 147. And if I just subtract that two, I will find my interest. They also say that capitalized interest. If you read II, it says capitalized interest. So I know I need to go there to my loan closing balance, and I need to add on capitalized interest of 273,000. Does that make sense? Everyone okay with that? Righto. Okay. I'm just going to make you aware of something. Some of you may ask, why is the closing balance in information II of the loan 4028, but the closing balance in our trial balance is this amount that we put in here, 3755, etc. It actually gives you the same thing. If I take 3.755 million and I add the 273, it's going to give me my closing balance of 4028 that we see in information. So just a bit of extra information in case you're wondering why. You can use any one. Okay, this one is just showing you that the interest is separate. Okay, the next one, and you guys really, I know you guys always struggle with this rent one, but let's get to it. The rent one. Right. I might do this video in two parts because sometimes when I upload long videos, it just takes a bit longer. So I'm going to cap it at 25 minutes. Okay. So on II, let's move on II. No, triple I, which is number 3. Okay. They say that the rent of 74,000 was received from a tenant from the period of the 1st of July to the 31st of August 2021. Okay, very, very important. Our financial year ends on the 30th of June. So I'm going to write that in 30 June. So that means from June, so July and August don't fall in our financial year. Hope that makes sense. So there's 2 months extra. So what do we call that when we receive income in advance? IRIA. Please don't write it as IRIA. It's income received in advance. Okay, so the income received in advance, then it says However, there's the amount takes into account a reduction of 750 per month on the 1st of May, and the year-end adjustment has not been made. So which year-end adjustment are they talking about? They're talking about 2 months extra rent in terms of income received in advance. So how are we actually going to figure that out? So what we need to do is find the monthly rent for July and August. And the easiest way to do it is to make an equation. So let's start with the equation, right? The rent was equal to 74,000 because they said that they received 74,000 rand rent, right? And then they said that from the 1st of May, it was increased by 750. So the first thing you need to determine is how many months without the increase. So July, I'm going to count on my hands. You obviously can't see. July, August, September, October, November, December, January, February, March, April. And I'm not going to count May because it was, so it's 10 months. I'm not going to count May because it was on the 1st of May. So I have 10 months times X, which is my rent amount. And then I'm going to have, if I have 4, I need 4 months more because I have July and August. Remember, I must make up 12, but I have 2 months over, so I have 4. Okay, so I have 4 months. If you look at it, they say that reduction. Remember, we always used to work with increases. The rent was increasing. But in this case, they actually got a reduction of 750. So they got the monthly amount of rent minus 750. And I mean, you can solve for X. I think everyone knows how to solve for X by now. You have 74,000. It's equal to 10X plus 4X minus 4 times 750, which is minus 3,000, right? So if I simplify that, I'm going to have 74,000 plus 3,000, which is 77. And I'm going to divide it by 14. It's 5,500. So my monthly rent is equal to 5,500. But remember, in May, we received a reduction. So I'm going to take 5,500 and I'm going to subtract 750 because of my reduction. And then that is 4,750. So my monthly rent is 4,750. But remember, I need to times that by 2 because I have 2 months that's over. I have July and August, that's an IRIA, and that gives me 9,500. I hope everyone knows by now that 9,500 must go into payables because you received something in advanced. It's not due this year. It's a liability because you received it before the time. I just want to give you a simple version of how you could do this. If you guys saw that 4 months we received a decrease of 750. So to simplify it, I can just take 4 times 750. It gives me 3,000. Now instead of subtracting the 3,000, we're going to add the 3,000 because it was a reduction, and then we'll subtract it afterwards. So you guys can try that. Please don't sit. Your time is very important. Please don't sit forever with a rent calculation with the increase in the middle of the year. It's more important to move on because I'll show you. I see that the rent, you only got 1 mark if you got this 9,500. It's more important to just continue working. I'm done with that when I'm going on to IV. It says after taking into account the corrections above, it was determined that an additional 85250 is still owed to SARS. And there you didn't even need your provisional payment because they're telling you that just put it in there, 85250 is owed to SARS, right? So it's telling you that that is owed to SARS. Hope that makes sense. They're not saying that your tax was a certain amount. They're literally telling you this is owed to SARS. Okay. Then With regards to the dividends, etc., we already worked that one out. We didn't need it because it just gave you your shareholder for dividend, which they actually gave you. Okay, then it says debtors with credit balances of 11,000 must be transferred to the creditors ledger. Okay, so that one is, I think it just takes you back to basic. Debtors who have a credit balance must be transferred to the creditors ledger. A debtor who has a credit balance, guys, he has a credit balance, which means he is on the credit side. Now, if I want to cancel that out, I'm going to debit debtors control. So I'm going to add 11,000 here. I'm going to debit debtors control, and then I'm going to go to my trade and other payables, and I'm going to add it here. 11,000. There we go. So meaning they had a credit balance, they probably returned something. That's what I'm thinking. They returned it, and then we actually owed them money. Right? So we're going to take it out of trade and other receivables because they have a credit balance, and we're just going to, so it was reducing, so we're going to add back on, and then we're going to go to our trade and other payables, and now we owe them more money. I hope that makes sense. There was an amount here that was reducing our trade and other receivables because it was a credit balance, so we're adding back on, and then we're going to move it to trade and other payables because we owe them money. That. Then on the 30th of June, Jimo Limited returns, okay, they returned cost to supplier. The selling price was 1750, but they needed to work up the markup. Right, so now, if that was the selling price, we need to work out the cost price because we bought it at cost price. So I'm going to take 1750 and I'm going to times it. If I'm looking for the small amount, I'm going to put the small amount on top, which is 100, and I'm going to put 100 plus the markup at the bottom. So if I take 1750 times 100 divided by 125, I get 1,400, and that was returned to its suppliers. So it's reducing our trade and other receivables. Okay. Oh, and there was also 10 coats. Sorry, so that's 1,400, that's 14,000. There was 10 coats. Don't forget to times it by 10. Right. Then at G, they tell us a fixed monthly installment of 35,000 to cover loan will be paid over the interest. Okay, so they say a fixed monthly installment of 35,000 to cover the loan repayments and the interest has to be made over the full period of the loan. And the interest will decline over the life of the loan. The interest on loan budgeted for the next financial year is 234. Right, why did they give you all of this information? All you needed to know is when you do the current portion of the loan, it must only be the capital repayment, not the interest. The interest we only add at the end of the year. So once again, they give me that 35,000 and it's the full repayment. Remember I told you guys that the repayment is made out of interest and capital. So that 420, the 35 times 12, is the full repayment. And they're telling me that the interest is going to be 234. So I just subtract that from one another. And I'm left with 186 being my current portion of my loan. So only the capital portion is going to be my current portion. Now, here's the thing. Even if you got that wrong, please go put it in here. Make up a number if you can't get to the answer. Make up a number. It's only the capital repayment that goes here, and that is 186. So if you have the same number here, current portion, it's going to be all right. Okay. Right. So now all that's left to do is work with our ratios. So I'm going to do that very, very quickly. I'm going to fill in the information that I have. I'm just adding up basically. So don't mind me. Oh, I forgot. Sorry, guys. I took 14,000 Rand for returns. Don't forget the double entry of trading stock. Sorry about that. 14,000. You must always think, is there two entries. Okay, and now I'm just going to put that information in, 4860. Okay, my trade and other receivables, sorry, this is 3811410. And my cash and cash equivalents, obviously, I'm going to need to get, sorry, I have that. So all I can do is subtract the 2, and I will get my cash and cash equivalents of 28590. So I take that, subtract these 2, and I'm left with that. I don't have my total assets, but I can get it once I get my total liabilities. Right, my ordinary share capital is a balancing figure. I'm probably going to need to get that. This, if I add all the things that I added up now, it's going to equal 3842. There we go. My liabilities, if I add it up, it is 1,259,500. And then balancing figure is my bank overdraft. So once I've added up everything, I go to my ratios. And you basically ratios makes use of the cross multiplication. So I hope that you guys know that. So I have my asset ratio, which equals to 1,2 as to 1. Now what helps you is if you go to your formula sheet and you see what your asset test ratio is made up of. Your asset test ratio is made up of these two together, which is, I'm just going to add that up, 4860 plus 3811410, and that is equal to 867 equal to 867. Let's do it below. It's 867 1 So that it's the current liabilities which we are looking for. We're actually looking for our current liabilities, right? So how do I actually do that? Okay. Right. So now I just wanted to, sorry, I was just calculating, making sure my calculation was correct. 4860 plus 3811410. I knew I was using the wrong amount. Sorry, guys. It wasn't these two. Remember, it's subtracting your inventory. So it's these two together. So it gives me 3811410 plus 28590. Please go to your formula sheet to see what is in your asset test ratio. Remember, it is your current liabilities minus your inventory or your debtors and your cash together. So that gives me 3840123. There we go. Okay. Right. Now what you have to do is put the numbers on top and your amounts that you have at the bottom. Okay, now this is how it works. This divided by this one should give you this one, this times that, this. You do the cross multiplication, but if it's at the bottom, you're going to divide it. So all I'm going to take is 384 and I'm going to divide it by 1.2 and it's going to give me 3.2 million. So I'm going to put that in there. So you use cross multiplication, which you do in maths. I'll obviously be able to explain this better if I have the whiteboard in front of me. You put the numbers on top and you put the actual ratio at the bottom. So that is on top. You divide it by 1.2 and it gives you, here we go, 3.2. Now you should be able to find your bank overdraft if you subtract all of these and you put it in there, and your bank overdraft is 499,250. There we go. It's just a balancing figure. You should, okay. Now what else is missing? my shareholders' equity. And the next ratio that they give us is your net asset value per share. So your net asset value per share takes your shareholders' equity and divides it by your number of shares. And that's why your formula sheet's really important, and it's going to times 100 over 1. So you fill in what you have. Remember, we're looking for shareholders' equity, and that is equal to 540. We are looking for shareholders' equity. So shareholders' equity is going to be X. Okay, I have, that's 540, my number of shares. I'm going to go look at D. They tell me that there's 1.8 shares. So the number of shares here is 1.8. And then that's times 100 over 1. So just give me a second, I'm writing it. It's hard for me to picture like this. Okay, divided by 1,800,123 times 100 over 1. Right, so remember, okay, I'm going to show you an easy way, but I'm going to show you the math way as well. The first thing you do is get rid of that 100. So what do I do if I get rid of that 100? I can take 2 zeros away, right? I can take 2 zeros away, and then I take 1.8, and I divide it by 100, and I basically get 18,000. Okay, now all I have to do is then cross multiply once again. So I'm going to take ordinary shareholders' equity. There we go. 18,000, and I'm going to times it by 540. So 18,000 times 540, and it gives me 97. You see how important is maths? Just first get rid of that 100. The other easier way to do it is to just put your NAV in terms of rands. So just put your NAV in terms of rands. Then you just take the number of shares, which is 1.8 million. Times it by your NAV, but in rands. And that way you don't have to get rid of that 100. I hope that makes sense. I'm going to look for my missing one now, 64. It's hard to do it without the whiteboard, 6480, because then I could just show you how I get rid of the 100. Okay. Now that I have everything, I can add up my equity and liabilities, which gives me 16762, 123, and then I just go and put it in here. 1672. Okay, because you should actually have the same. Remember, that's the rule of the balance sheet. I'm missing 17. Missing that your total assets and your total liabilities need to be equal, right? That is it from me. Like and subscribe to my YouTube channel. Thank you.
What I have a YouTube channel.
I do.
Look down.
I hope that this is going to save.